Hello, everyone. Welcome to Binary Alpha Season 5, Class Number 9. Today, we are going to be specifically talking about how to have X-ray vision with higher time frames and reverse engineering. This is kind of a follow-up class to our last class on the market structure, but I hope this will give you guys some more clarity on what we mean by having X-ray vision and being able to reverse engineer trades that we see in the market so we can understand why they happen. Okay, so let's get moving forward here. So what is X-ray vision all about? You ready, guys, for this? This is what X-ray vision is all about. It's about seeing as Kazi sees, having the vision for the market as our friend and teacher Kazi is able to see. I hope he's watching this because I hope this was funny for him to see the X-ray visions come on his face. But ultimately, this is what we're trying to do, and what I want you guys to understand about this X-ray vision class, that we want to be able to see the market and see the momentum and understand how the market moves as well as our teacher Kazi does. Okay? So that's what this class is all about for us. I hope you had a little fun with that. I did. Okay, so X-ray vision and reverse engineering. We want to be able to have X-ray vision for the future of the market by analyzing what it did in the past. We know from history, for instance, that we can learn lessons from our past so we don't make the same mistakes in the future, right? Well, with X-ray vision and binary alpha, we can have an X-ray vision for the future of what the market might do by analyzing what it did in the past. If we do this every day, we will sharpen our view of the market, the future of the market, and be able to pre-plan our attack. One of the best ways to do this is actually by reverse engineering Kazi's trades on the $45 account, and also reverse engineering what we are seeing happen in the market as well. By being great analysts, we can understand the why behind the what. We talk about that a lot with binary alpha. We want to understand, why did a seventh logic happen here? We see what happened, a seventh logic happened or a bonus run happened, but why did it happen? And it's very important for us to get to that point. And yes, we still follow the logic and we still follow the rules, but we don't follow them blindly. We get an understanding of why Kazi made these logics up, why he created these rules to help us trade within. And it also helps us to see why they were so important to stick with only the rules and not try to trade a bunch of other stuff, or why, for instance, Kazi says stop if you lose four. I mean, there's so much, rich knowledge and wisdom to why he created the logics, that when we start to understand that, we see why we should not stray from the logics. Some of our friends from season 2, Kent and Larry, they just went and spent about 3 weeks with Kazi in Bangladesh, and they met these 7 guys. I believe one or two of them are his brothers. But they met these guys who are his co-traders that come to his home every day and trade. And one of the things that they noticed is that these guys do not stray from the logic. They just do what Kazi told them to do. And that's because they understand why. They understand, why would I do something different? Because here's the guy who's profitable. Why would I try my own thing if this guy is doing something that works? And if you're in binary alpha, that's why you're here, because you feel like maybe this is something that could work for you as well. Okay, so we understand the why behind the what, and this will help us to become much better traders. And again, we can be proactive rather than reactive traders. This is going to come into really going to come into handy in a really big way when you guys in a couple of months go into the co-trading group, so the specific calculator we're going to have, because some of you guys are going to be the recovery experts. Some of you, when you're trading in groups, there's a special type of calculator that we have, and we will show you guys that in a little while, in a couple of weeks or maybe a month or so. But the basic idea is that some people are kind of the strikers. Some people are going to be the bonus people, the bonus experts. But then there will be other people who will be experts in seventh logic, invalid seventh, fifth logic, invalid fifth logic. And with that expertise, you will be able to recover when people lose bonuses. And it's going to be very important for you to be able to sometimes look in the chart and say, okay, I need to find where the market may give me a 100%. If a seventh logic happens here, I know it's true. I know this is a good seventh logic because this and that line up, because I've reverse engineered the market, and I can understand why Kazi sees those things. Kazi has shown us many times in the past that if he needs a recovery, there are certain places in the market that he will go to wait for a seventh logic to happen. And if one happens there, he says 100% for me, 100% trade, because he knows that the market will reverse from a position if it gets stuck there. Okay, and we will show a little bit more about that in this class. Remember that the higher time frame, specifically what is happening in the 1 hour chart, can give us a clearer picture of the market's future. We talked about this in the previous class about market structure and the M and W patterns in the market. We can set up alerts and think, if the market goes to this spot, or if the market breaks this position or touches a tension point or pin, then I know what to prepare for. Remember, if it breaks position in the market, then more than likely it has the momentum to continue in that direction. But if it gets stuck there, then we may see reversal in the market. Now, we originally started, some of us from season 2, we originally started to break down some of Kazi's bonus runs to help us to get a better picture of how he managed the market so well. 4 of us took 1 week each of his bonus runs on the $45 account to try and reverse engineer what he did so that we could better understand how to attack the market in the same way in the future, just as Kazi did. X-ray vision is how Kazi himself developed binary alpha trading strategy. That's something we have to remember too. He just researched the market and saw these patterns constantly happening all the time as he was trading like a scalping type strategy within binary options. He started noticing certain patterns in the market happening over and over again. He saw certain patterns that he developed into like a binary set of numbers, ones and zeros, that if zero is up and one is down or something like that. And within a four candle sequence, he saw that only one of so many patterns developed there between the ones and zeros, but between the ups and downs. And he developed this strategy of these 7 logics based upon that, as he looked at the structure of the market. So ultimately, this is how he himself developed the binary alpha trading strategy. He noticed these points of tension in the market, of uncertainty in the market from the previous 2 days that affect the current day's market as well. Okay, this is, I was just saying to you guys that some of us made some presentations where we went and reverse engineered some of Kazi's trades. 4 of us actually did this. We made Google slide presentations. Every piece of analysis really helps us to take one step further in our understanding of how to be a better and more consistent binary alpha trader. Okay, so I'm not saying we necessarily analyzed everything perfectly or right, but this really helped us. This was the one I did. I took August 10th through the 14th of 2015, so that was some months ago, and I just broke down every single one of his bonus runs and tried to figure out, how did he see that in the market? How did he prepare for that? Okay, so here is one of the things I want to talk to you guys about. We talked about this a little bit in the last class, was about these anchor points. We said that banks create anchor points in the market where they will buy and sell from to make money. This is essentially our 1 hour pins. These really long pins most of the time are places in the market where somebody a bank has an anchor point here, and they're able to push the market down in their favor. And there's these are battle points in the market where they battle back and forth between these really large banks. And this is especially true of these really large pins. If the market gets stuck at these pins, it will reverse. But sometimes another stronger market maker will come in and push further, and that's when a big pin gets broken. Okay, so these are just kind of some of the anchor points that we're talking about here in the market, where a market maker came in and said, this is the price that if the market gets here, I'm going to sell, or if the market gets here, I'm going to buy. and that pushes the market in their favor. Okay. Now here is one example of reverse engineering Kazi's trades. This is from the week that I did, the August 10th through the 14th of 2015. This was USD CHF, USD Swiss. The Europe market alone was open. That was something that I monitored at that time. The reversal level pins in a small way, then it breaks strongly, then it breaks the Kazi high low. So basically, look at this here. This hour here. This is my 1 hour chart. This is my 1 minute chart. This hour here is what's going on here in the minute chart. Okay, so there was a right around where this Kazi high low line was. This either this white pin or this, I think it was, there was a gray pin here sticking through. Basically, what happened here is Kazi saw that this is what he would consider a trending market. Remember, we talked about last time, if we have 3 hours in a row going in the same direction, we have a trending market. So this 1, 2, third hour in a row here, we actually have a trending market. Let me draw this out real quick. Okay, so we had 1, 2, 3 hours in a row. We have a trending market. Okay, fourth hour, fifth hour. Even though this hour comes up, this hour comes down, this hour comes down, we're still in a trending market down overall. The market came up for 1 hour, but it did not continue for many hours after that. Okay, so we are in a trending market type situation. Market is trending. We know if it's trending that there are some good potential for bonuses, as we talked about in the last class with the market structure. And what happens here is this candle here comes down, and there's a little, I believe there's a little gray pin sticking down here. And as the market is able to break that, it breaks it right along in here, which this was actually before we had the tension line indicator, but more than likely there would have been a tension line right here because of that. And as soon as the market's able to break through the tension line, the Kazi high low, and the second moving average and give us a nice valid flag candle, there was a lot of space for the market to come down. You can see right here, there's nothing on this left side. And so the market works its way down. And again, probably right here, there was another tension line. And so this was a perfect 3 bonus run opportunity to get here. And this was one of Kazi's trades. And see how clean this is. A nice Kazi high-low break, nice flag candle. I mean, these are really strong bonuses as well. And this is something that he does over and over again, because he knows that this is what's going to happen in the market, again, from reverse engineering in the past and seeing this happen. Okay? So again, just like he did, we can also do that. So, search around in the 1 minute time frame and see if you can find a really nice, three bonus runs somewhere. Okay, and if you see that, go and look at the 1 hour chart, do some research, try to reverse engineer and figure out, why did that happen in that place? What was so different in that place that gave me a really nice 3 bonus or 2 bonus loss and recovery? What was so good about that position that it gave us a nice 3 bonus opportunity? Okay, again, this is all about finding the why behind the what. Questions like, why did this get 3 bonuses? Okay, we just said that. Why did this reverse immediately? Sometimes we see that as well. We see that it looks like maybe it could be a nice bonus run, but then it just reverses and gives us some type of 5th or 7th logic. And why did a valid 7th logic rather than an invalid 7th logic happen? And vice versa. That's a really important question as well. Right now, a lot of the questions you guys are talking about it yourself sometimes, but a lot of times you guys want to ask us. And that's important sometimes. We understand that. But it's also important for you to go and do this research in the market. Honestly, a lot of times, or sometimes, Kazi did not answer our questions, and he let us go into the market and find out some of these answers ourselves as he was teaching us more about higher time frames and market structure and stuff like that. Another question is, why did the market trend so heavily, and what do we expect when it does? Sometimes the market trends heavily because there's really strong news. The NFP report, or maybe right before that comes out, or when some of the other strong news comes out each month. Sometimes we see trending there, or it could just be a bank making a big move in the market as well. Okay. Again, remember this: all it takes to be to be successful in the long run. Remember, we are in this for a long run. This is a marathon, not a sprint. All it takes to be successful in the long run is for us to be certain about 3 to 5 trades a day, 3 to 5 wins a day. That's all we need. Okay, 3 to 5 winning cycles, or 3 to 5 trades where we don't end with a loss, right? Because in the long run, we can grow an account significantly. Kazi started with a $45 account, and in less than a year, he was able to grow that account to over $300,000. Now he did get more trades from time to time, but again, if you for example became an expert in seventh logics and you traded and you could get 3 to 5 seventh logics a day, and you followed his 5-10 method, you can grow an account significantly over time. I'm not saying it's easy, but you can do that if you become good enough in just seventh logics. Okay, so how do we get X-ray vision? Let's look at a live 1 hour chart. Well, it's not technically live because it's Saturday right now, but we can look at a chart here. Okay, I've marked some positions. Let me go first to this AUD USD chart. Okay, one of the things we talked about in some classes not too long ago was about the ranges of the market. Okay, so say that I'm in this current day. Okay, say that this is my market day that I'm in, and I see the previous ranges of the market. This was a previous high on the previous day. This was a previous high of the market. So the market ranges on these highs are up here. The market range lows are back here. So I can say that the market, when it gets to this point, it's going to be a point of tension for me. This is where the market would have drawn a tension line, and so here the market could either struggle or give me some bonuses. Okay, so let's go and look right here at these two positions. So we have this high. This was the high of a previous day. So this is our range of the market. Okay, so on this market day here, for instance, these dotted lines, in between these dotted lines are the market days. So we had a high here, and then we had the low somewhere around here. Okay, and so these are the ranges of the market. So let's look on the 1 minute chart over here and see what happened when the market tried to get up to these higher ranges or lower ranges at time. We're going to do the higher ranges on this currency pair, because quite often, again, what we might see here, and this is what Kazi's looking for, is very often where the market reversed from before. If there's a strong enough player in the market there, the market may reverse from there again. And this is where Kazi would be looking for a potential seventh logic scenario. Okay, so let's look here in the market and see what happened at these, a seventh or a fifth logic. See what happened in these spots. Okay, let's get to this place in the market here. Okay, actually, let me see where it was. This was on the 3rd of February. Okay, get this place in the market here, 3rd of February. Okay, so here's what we have. Okay, you can see the market is ranging up. It's getting up there. It's trying to get up to this place in the market. Okay, and you can see here, the market doesn't really give us a good flag candle here, but here it does. So let's zoom in and see what we have here. Now, even though you may think this looks like a fourth level, I'm going to tell you this is a third level, because right here, this is actually a half level trade. Again, let's take our measurements like I do. We measure this here. Here's our first level. Let's copy this. Okay, as we can see, this here is below this. So really, this is our second level right here. And if we grab this again, this is our third level right here. Okay, so this is the level 3 break that we have, right? And what happens here in the market? The market tries to push above it, but immediately it comes back down. And what do we get? We get a nice, valid fifth logic here, right? Okay. For Kazi, in a market like this, now he may wait until let's see what happens on this next candle when this candle comes up here. Okay. I would say probably Kazi would like to wait in a situation like this. So until it gets up to this higher position. But if he saw this happen, he would have confidence that this was a fifth logic, and he would go in and take his trade there. Okay, so the market works its way up finally to this price point, which was another range of the market. Again, we don't necessarily get a good valid flag candle here, but look what we have. Look what we have here. Okay, let's draw our trend line here. Okay, this is a second level trade here. Okay, so we have our trend line here, and what do we see? We see two losses happen. Again, this is just for an example. I know that this is not a proper flag candle, but just for an example, see what happened. The market tried to push up, and then it came back down. So we had a tension line right here. I guarantee you, a trade like this, Kazi feels 100% about. If he, we've talked about some of you are going to be seventh logic experts. Some of you are going to be taking trades in this calculator type system that we will show you guys in maybe a month or so. Some of you are going to be waiting on trades like this in the market, and you want to make a certainty because if somebody has two or three bonus losses or two bonus losses, you want to make sure that what you are trading is really good for the market. Sorry, is really good for your team and is going to recover some of the losses. And so in a scenario like this, if we had a good flag candle, we're in a second level type situation, we've hit a range of the market where it shows it wants to come back down. Now, probably what Kazi would do is he would do a fake push off this tension line for 2 minutes, and he would end up winning down here somewhere. But again, if you just simply do a 2 minute put here, because again we're above the Kazi high low, you may get nervous and feel like, oh no, I'm losing my first minute. But again, you end up winning right here. You can see that this gray candle finishes below this candle right here, right? And so for Kazi, again, a lot of times this is where if he really needs a recovery situation, this is what he's going for. And then look what happens when the market is able to finally break through strongly, you get a nice three bonuses. Okay, so that was a nice position in the market where, again, we looked at the ranges. We saw that, we looked at our current day, and we saw where the market may try to range from or try to either reverse or break out from, and we were able to see a nice potential fifth logic and seventh logic. Again, if you're trading this style, if you're trading, sorry, seventh logics, and that's what you're going to be doing sometimes for recoveries, then that's a good place for you to look in the market. Okay, again, here's another situation. So um, say we're in this day, we see that the range potential of the market is right here, and right here, and then right here. So we look and we see our chart here. Now here was a really large pin as well. Here was a place where the market could have reversed as well. Let's just mark that and see what happened there as well. Okay, I like to come in with these vertical lines and mark my 1 hour charts and see where the market tries to touch here in these different price positions. And then we can go in the 1 minute chart and we know where we're at. We can see what happened at these ranges. You can see that the market ranged up here, it came down, it ranged up here, it ranged down here. Now it looks like in this part of the market, instead of reversing, the market broke through strongly, and more than likely there were some bonus opportunities there as well. Okay, these are kind of smaller ranges in the market, but as you can see, the market worked its way down. It got a large pin here, went back up, came down. It came to around that same area again here, which there would have been a tension line here, and the market pushed back up off of this. Again, this is just giving you guys some insight on how to see the market a little bit better. So let's go to these days. This is February the 3rd and the 4th, and see what happened in these ranges of the market to see if maybe we got some good setups for seventh logics or not. Again, this is not guaranteed that you will get good setups, but these are places where the market has more potential to do that. Okay, so we were going up, right? Yeah. Okay, so here, for instance, so here's a market where here's a place where we have a one candle flag. We get a loss, a recovery, then we get a D flag. Now, for me, in a situation like this, okay, so right here is our, excuse me. Actually, it doesn't end up meeting the criteria for a D flag. It's a little bit short of it. But again, if this was a D flag, we see this comes up. It tries to get through the market here, but doesn't have the strength. Comes back down. We would be in a 2 minute situation again if the proper logic was here. We'd lose our first 2 minutes. and then of course hugely recover here in our second 2 minutes. Let's look. Here's another position as well. So we have our flag candle. Okay, obviously with such a large pin, nobody's going to go for any type of bonus run there. And we see it hits this range of the market again, comes back down, maybe fifth logic. If it breaks that Kazi high low there, um, even if it's not fifth logic, it ends up being a seventh logic. And again, we could either win in this candle if we consider this a fifth logic, or we can win in these two for a 2 minute seventh logic. Okay, let's look at excuse me, let's look at some more of the ranges of the market here. Okay, here we did not get really any type of nice flag up in this area. We got a flag here, first level, a bonus loss recovery. Again, the market will try to push to these different ranges. We didn't get a very nice trade here, but this is the dead zone, so we're not trading in that zone anyways. Okay, let's see what else we may have here. Yeah, mark some more. Here we go. Here's our next time frame. Okay. See if we have any. Again, we didn't get any nice flags here, but again, you can see what happens in the market. The market tries to push up, and it gets rejected. Look at this. Look how strong of a rejection this is in the market around these previous day ranges, right? Really huge rejections in the market happen a lot of times when these ranges get touched, unless they can get broken. Okay. All right, now here's a nice scenario as well. So we get kind of a flag candle sequence. Again, this is just for example right now. Kind of a flag candle sequence, three bonuses, almost a D flag. But again, the market gets into this kind of ranging area and the market pushes back down. When you get a clean flag candle in a situation like this and you see a setup like this, 100% go for a seventh logic. As long as everything's valid. Okay, so here we have okay, so here for instance, this is a really good example. Again, this is a first level trade. I know we've talked about this many times, but this, and again, this isn't a proper setup, but we have somewhat of a flag candle here. We have these two losses, but again, we follow our logic and we stay with the invalid seventh, right? Let's see if we have any more situations where the market came to. Okay, so here we have a flag, we have a bonus, maybe like a tie here. This is our D flag. Okay, so let's mark this out. Here's our D flag. Okay, double flag, that's what it stands for. We have one bonus, two bonuses, three bonuses. This is our D flag. Again, we have a second D flag here. Okay, let me mark this real quick. And we have come, this was one range of the market that it was able to break through. Here was a second that it broke through a little bit, and then it almost touched this third range of the market. But when you saw it come back down strongly like this to three bonuses, okay, we're still in 2-minute seventh logic mode when this one happens. Kazi 100% is going to go for a 2-minute type trade here. 2-minute seventh logic. This is what he would consider a 100% type trade. Because for him, again, the ranges of the market are really important. Okay, because the ranges help us to see where the market either has the potential to break or has the potential to reverse. Okay, here's a really good example here. Again, this is the first level, and it looks a little bit nasty, but again, as you get more experience, you can trade these. You have a flag candle here. With such a large pin and such big momentum in this candle, I believe what was trying to happen is a different market maker was trying really hard to push this up. Or it could have been news here too. It was right at 1400 time. And what happened? The market pushed up, but because it hit these previous ranges, it just was not strong enough. Comes back down and made a nice 2-minute seventh logics there as well. Okay, really nice reversal. Again, Kazi's looking for a lot of stuff like this. Here we have a loss and recovery, D flag, two bonuses into some type of seventh logic as well there. I mean, there's a lot of trading opportunities in here. So let's see if we had anything on Euro USD as well. And let's try a different pair actually, because this is well, we can look at this. Okay, so let's look at a bottom range of the market. So here Market had a little bit of reversal, right? Small reversal here. And here's a really big pin here. Um, here's a really big pin here in the market, right? So these are places where the market has the potential either to reverse, but again, we actually looked at this before. Here was a really large M pattern, and the market just broke through strongly because it had such momentum to break down. Let's come down here to this range of the market, and then yeah, this range as well. Here you see this really large pin right here. It's about 60 or 70 points on the 1 hour chart. So, oh, sorry, let me put that back there. Let's see what happened right here at this position. There may have been a good opportunity for some type of seventh logic to happen here as well, because you can see the market tried to push and ended up getting rejected there. So that was a potential place for something to happen. So that was January 29th. Okay, look where we had our marker here. Zoom in here. Okay, here was one range here. Okay, here was a second range of the market. And basically, yeah, I didn't draw this perfectly. This is where the market tries to come down to. So, excuse me, we have a single candle flag candle here, and the market, the line was probably here. I just didn't draw it exactly on the price point. And the market pushes up from here. And again, what do we see we have? We see that we have a nice, valid fifth logic here that has space to come up into this position. Now you could play this two ways here. You could play this as a valid valid fifth logic, 1 minute, or if you wait and you see this pinning happen here, you can play it as an invalid because it has a hard time getting past this tension line in the market as well. Okay, again, this just helps us to kind of see, the potential where the market with the with the ranges, where the market has the potential to give us some nice reversals, nice valid seventh logics, just some nice places where the market can really help you to find some recovery trades if you need them, especially once you get into group trading. That's really important. Also, look around your tension lines. Look around, your points of tension where the market comes to, because very often that is also a place where the market will reverse from. You can see here, again, this is not a proper flag candle, but the market comes down here, this tension point, reverses from there, and then it gets some more momentum, and boom, it breaks down and breaks past it and gives a nice bonus there. Okay, see if we can find one more example here. Let me look at let me put the tension line indicator here. For some reason, it's not there. I think I forgot to put it on this chart here. Okay, so yeah, this is just an example where you can see the market tries to range up and then tries to break past these tension points, but it does not have the strength to, and it ends up reversing from there. Sorry, let me zoom out and find it again. Okay, yeah, this is a really good example. So we have a valid flag candle sequence here. We have two bonuses. The second bonus gets stuck at the tension line, and what do we get? We get these two coming down, and we get a nice 2-minute valid seventh logic. Okay, this is a very nice scenario for us because, again, the tension line causes the reversal there. So this will just help you guys to get a better understanding of where the market might try to reverse from, and then also places where the market might try to push through from as well. Okay. Well, guys, I hope this has helped you. I hope this has helped you to understand and see that you can actually come first to your 1 hour chart, and depending on what you're trying to see in the market, there is a good potential for you to get the type of trades that you want. Again, if you need a seventh logic, or you need a valid or invalid fifth logic scenario, you can find these places in the market where the market ranged from, and try to see what the market may want to do at places like that. Let's see here, for instance. So previous day here, this was the previous day's high. So let's see what happened in the market here. This was on the 2nd of February. Okay, February 2nd around the 1400 hour. Let's see what we had here. See if there might have been something good for us. Okay, again, not a great flag candle sequence there, but as the market worked its way up to here, the market ended up pushing down from there, right? Okay, and then as well, we see, yeah, we see, see that type of structure there in the market on that day. And on this day, we may see some bonus runs here because see how the market, instead of reversing from here, it pushed through. So this is 11, 12, 13, 14, 1500 hour on this day. We may have seen some good bonus opportunities depending on where the tension lines were previously as well. Let's go to that real quick, see if there were some opportunities there. This is on the 3rd of February, just a few days ago. Okay, started around the 11 o'clock hour, I believe. Okay, started around the 11 o'clock hour. Here was a really nice flag candle break. Here was a really nice flag candle. Two bonuses, loss and recovery. This is not really a nice flag candle break. Here's a nice break here, loss recovery. Another nice flag candle into a, I'm not really sure if that's a great flag candle, but into a seventh logic scenario. Um, and not a great break there as well. Here's a nice break, loss, recovery, deflag, bonus, loss, recovery. Here's 4 trades right there in that setup. Here's another situation where you have a loss, recovery, deflag, 2 bonuses into a seventh logic. I mean, even if you just played this here between 16:14 and 17:05, less than an hour, you have 4 wins here. You have 5, 6, 7, 8 wins just in that 1 hour. And again, that's just looking at what's happening in the 1 hour chart. And here we go again. Here's a really nice bonus run. Huge flag candle. 1, 2, 3 bonuses, deflag, 2 losses, invalid seventh. Again, this is what in less than 2 hours. You have those 8 previous wins, and then you have 3 more here into a invalid seventh logic type situation. So that's 4 more wins here. You've got 12 wins in 2 hours. That's plenty, plenty, plenty for your day. Okay, and again, this is just about being able to understand the 1 hour structure and being able to be able to see all that. Well, guys, I really hope this has helped you to understand why it's important to go back and look at these previous trades that Kazi has done, but also to look in the market and see, why did a seventh logic happen here? Why did a fifth logic happen here? Why did it get, a lot of bonuses? And as you research this for yourself, you will be able to see the market more clearly and be able to pre-plan your attacks and become a better binary alpha trader and move forward really well in your trading career. Well, thanks everybody. I hope you enjoyed this lesson and hope to see you soon and hope you have a great day. Thanks so much.